Hello and thank you for joining our weekly mortgage rate segment. I'm Megan Abdelaziz, Real Estate SINY.com's mortgage reporter. The mortgage rates continued on their upward trend again this week. The 30-year fixed rate increased to 4.10%. The 15-year fixed rate increased to 3.28%, and the 5-year adjustable rate increased to 2.93%. The mortgage rates haven't been this high since the middle of April 2012 for the fixed rates and since the middle of August 2012 for the adjustable rate. On Wednesday, June 5th, the Federal Reserve released their Beige book for June. This report, which covers all current economic conditions, stated that there has been a modest to moderate growth in the economy since their last Beige book was released in April. Two of the important sections that we looked at were the real estate and construction section and the employment section. The real estate and the construction section of the report showed that there was a moderate to strong growth in the residential sector, while the commercial sector only saw a modest to moderate growth. The employment section of the report showed increases in hiring, but didn't tell us by what degree. The Bureau of Labor Statistics will be releasing their employment situation summary for May soon, so we will get a better idea about the employment section then. Gallup.com released two polls this week dealing with Americans' confidence in the economy. The first poll, which was posted on Tuesday, June 4th, deals with Gallup's U.S. Economic Confidence Index. This poll showed an update to their weekly average index, which has come up to a new high at -3 for last week, from -6 2 weeks ago. The monthly average U.S. Economic Confidence Index was also posted along with the weekly averages. For May, the U.S. Economic Confidence Index monthly average was up to -7, the highest it has been in 2013. Gallup.com's second poll, which was released on Thursday, June 6th, was about Americans' optimism in the city or area where they live. For May, 61.9% of Americans felt that their city or the area where they live is improving. This is a decent increase from February 2009, when this poll was at its lowest point, as only 51.1% of Americans felt that the city or area they lived in was improving. Gallup.com broke down these percentages even further for us by region and compared the numbers from May to what they were back in February 2009. The percentage breakdown shows the East at 48.9% in February of 2009 and 57.2% in May of 2013. The West saw 52.2% in 2009 and 62.5% in 2013. And the Midwest was at 50.9% and 60.8% in 2009 and 2013 respectively. The South, on the other hand, saw 55.8% in February of 2009 and 65.2% in May of 2013. Even though the housing market is getting better, these higher rates are affecting it in a way. As soon as the mortgage rates started to rise, the amount of mortgage applications being applied for decreased. The Mortgage Bankers Association released their weekly mortgage application survey on Wednesday, June 5th. Which stated that their market composite index, which covers all types of mortgage applications from new mortgages to refinances, decreased by 11.5%, and their refinance index decreased by 15% from the previous week. Americans are most likely waiting and hoping for the lower rates to come back, which is why the mortgage applications decreased. But will the rates go back down, or will they just continue to rise? The stock market and the 10-year U.S. Treasury bond yields have been going down since last week. In just 1 week, the Dow Jones went from about 15,300 to about 14,960, and the S&P 500 went from about 1,650 to about 1,600. As far as the 10-year U.S. Treasury bond yield, it went from 2.15% down to 2.10%. The stock market and the 10-year U.S. Treasury bond yields usually help guide the rates to their next stop, so we'll just have to wait and see where they come in next week. Make sure you check out our mortgage blog each week on trendingsiny.com, since the mortgage rates are always volatile. Thank you for watching, and be sure to like us on Facebook, follow us on Twitter, and follow our blog at trendingsiny.com. Once again, this is Megan Abdelaziz with realestateSINY.com.